Well, according to the Department of Labor's Jobs Openings and Labor Turnover Survey, JOLTS, released today, job openings in December fell to their lowest level since September of 2020. Private employers added just about 2,200 or 22,000 jobs in January, that is. That's below expectations, according to ADP. Other key economic indicators show continued strength, though. The unemployment rate held steady, 4.4% in December. CPI only rose 0.3% month over month in December, and GDP growth remains strong, with policymakers projecting 2.3% growth for this year, 2026. Ted Thatcher, president of Bright Lake Wealth Management, joins me now to break it all down. Ted, good to have you. Good to see you. So break it down for us. What's the bottom line with the jobs market?
It's a really important question to be asking when we look at where the economy is at. We have to look at the consumer and we have to look at the jobs numbers. I think that we're getting mixed signals a little bit right now. Like you mentioned, initial and continuing claims came in really, good, although, down from where they were. Last week was the best they had been since September of 2024. So we saw a little bit of reversion to the mean, but overall stable. The weakness really is in that JOLTS report, how many job openings we have. I think some would maybe put some alarm bells around this, but the way I see it is we're just in a little bit of a different environment economically right now. We're actually seeing, when you look under the hood, a low hire, low fire type of environment. And so, the labor market, the unemployment rate does sit at 4.4%. We would be a little bit more hopeful if we had a few extra job openings. But again, we're just seeing less volatility and movement within the job market right now.
Okay, low, higher, low, fire. Okay, so steady. Well, the numbers of job openings is now nearly about a million below the supply of unemployed workers. Should we worry? What does that indicate?
I do think that the important conversation to have about where the economy is at as a whole is not just only at the jobs numbers level, but also at the broader economic vital signs level. We are seeing really good data in the growth metrics for GDP for Q3 and Q4 of 2025. The growth rate for 2026 has been raised. And on the inflation side, inflation is currently sitting below expectations, and they had lowered them for 2026 as well. And so there are real positive indicators for consumers as well. And with that growth, of course, we also expect to see the jobs rate openings and all those data points continue to improve.
Okay, yeah. Speaking of that, when you look at these numbers, the positive economic indicators like GDP, CPI, like you mentioned, what does it tell us about the overall, the big picture, the stability of the economy?
When we look at the data points specifically, it does show a good story. I think that the market has been really focused and concerned about, some of the news, quote unquote, headlines, right? With the Fed didn't lower rates a couple of weeks ago. We were concerned about maybe the trade war situation with Canada. And so it's a little bit fickle in that way right now. But when you actually do look at the data, there is a positive story to tell. And I think that at the end of the day, the fundamentals are what drive the financial markets and the economy. And so while we may see volatility here and there because of a headline, at the end of the day, it does have to come back to the fundamentals. And so I think there is a really a positive projection in the short term for the economy.
Great. But will the JOLTS report possibly push the Fed to make any changes with the interest rates? What do you think?
I do think that the Fed has been super clear about this. They have really dived in and said, okay, the key number, the key data that we're looking at is the jobs market. And I think that this is the kind of report that may give consumers the relief they're looking for when it comes to rates. Obviously, we didn't get a cut at the most recent meeting, but their next meeting is on March 17th. If you looked at the odds this morning, before the JOLTS report was released, there was a 91% probability of no rate cut at all. As soon as that was released, it jumped by over 20%.
Okay.
And so, look, I wouldn't bet the farm on a rate cut yet, but that's the kind of report that will bend the Fed's ear.
All right. Ted Thatcher, President, Bright Lake Wealth Management. Appreciate your time today, as always.